Shanta Gold today reporting record quarterly gold production of 24,552 ounces and saying it remains confident it will achieve its 2015 annual production and AISC guidance of 72 to 77,000 ounces at $850 to $900 per ounce respectively. Well, the CEO, Toby Bradbury, joins us now. Record quarterly gold production. Things are looking good. Are they as shiny as they seem?
Yes, they are, Sarah. We've turned the mine around this year with a redevelopment program in the first half, which is now yielding the results as we've seen for the first quarter, and we're very confident we'll achieve our guidance for 2015, both in terms of costs and production ounces.
What is it that's really sort of turning that around for you?
It was a combination of a number of factors, but a fundamental redesign of the open pits that we currently operate. We've got two mines, and both of them provided us with an opportunity to do things differently. And in effect, we've reduced our mining cost by around 50%. And
when you say do things differently, what are we talking about?
Looking at the incremental elements of our operation to see where the high cost areas are that we can actually displace and push out and not lose them, but put them into an underground resource and make the surface mining operations as cost effective as they can be. Why
has this not been done before now, before your tenure?
Right. Firstly, it's recognising the opportunity, and one of the, if there is a downside to having a high-grade resource, sometimes mining operations can carry surface mining to a much greater degree than might otherwise be the case. And in our situation, we can actually make a bigger contribution from underground than we can from surface.
Looking at that underground, how much production can we expect going forward? We talk about the full year guidance there, but looking further into 2016.
So 2016, our numbers will be broadly the same as we have for 2015, probably even slightly increased. There'll be very little underground production in 2016. It will still be mostly surface mining. Underground mining comes in from 2017.
In terms of costing that then, what are we looking at? How are you planning on funding that?
The capital for the development of the mine will be funded through self-generated cash flow. We have a standby facility with Investec Bank, which we refinanced with earlier this year, and we're also looking for vendor financing on some of the mobile assets that we're going to purchase. How much
do you feel how much is needed for you to get fully operational on the underground at fully production levels?
We're reviewing the funding requirements, but we've used a $1,200 gold price, and we are, broadly speaking, self-funding. But we're looking at that because $1,200 obviously is roughly where we are today, but we want to make sure that we're protected through the downside if there is one.
Looking at some of your other assets, we've been talking mostly about the new Luika. Where else are we going to see things shining brightly for Shanta Gold?
Well, I think the other stream of the new Luika operation isn't just the operations, it's the exploration that we're doing there to expand and extend the resources, build them into the mine plan on an ongoing basis. That will add value to the new Luika operation, and then separately to that we have a development project in the central northern part of Tanzania called Singida, and we're going to focus some attention on that now as well.
Yeah, that's an advanced stage exploration project at the moment. So in terms of what we can expect from that, what are we looking at sort of time-wise?
Well, I think we're just between now and the end of this year, we're going to look at our options for Singida. Our focus this year has been very much on new Luika. I started in the role as CEO in April, and we've achieved a lot in that period. We've now, with new Luika on a sound footing, we've now got the opportunity to look at Singida as well.
Yeah, let's look at that. So you have only been in the position since April. Are you happy with the way things are progressing at the moment?
I'm very happy. I'm always amazed at how much can be achieved when people are given the opportunity to really participate and contribute to their roles, and that's what's reflected in our results.
You're losing your CFO though. How does that impact things?
It's not so much we're losing him, he's moving on to other opportunities. It won't impact us. I mean, he's been a very good contributor to the business over 2.5 years. He's been working remotely from his family, so understandably he wants to go back and spend time with them now. It represents an opportunity for us as well to bring in a new skill set in much the same way as when I came in, I brought in that sort of skill set. So we'll be able to capitalise on some other opportunities within the company.
Speaking of opportunities then, is there anything that Shanta's looking at the moment elsewhere?
Our objective is to create a very sound model with our current business and then potentially use that to grow the business going forward. And we do have aspirations for growth. What
aspirations? Where are you looking?
We're not looking at anything in particular at the moment, but that's, those are things that will come.
Is it all reliant then on the price of gold? We're at 11.76 at the moment. Is that sort of really reliant then your growth?
No, I don't believe so. And what we're focusing on is low cost, high grade opportunities where we can maintain sustainable production, which generates a robust cash flow, but provides a cushion of comfort in a gold price volatile environment.
In terms of price, let's look at your share price at the moment. What are you saying to shareholders who've been with you for a while, looking for a real sort of turnaround in terms of the share price?
Well, I think what we've demonstrated, particularly in this last quarter, because it hasn't just been the production and the costs, we actually also delivered a base case mine plan, which gives a map for the next 5 to 6 years for New Luika, with the potential for us to continue to add to that. So we now have a roadmap, if you like, of where we're going to take the business going forward. And I think in the past that hasn't been there, and consequently the market and the investors haven't really been able to judge how to value the business. We've now given them the benchmark, if you like, to be able to measure us going forward.
For you, what is the biggest challenge then that Shanta Gold faces?
Just continuing to build on our reserve base at New Luika. I'm calling it a challenge, but we're running 2 parallel business streams. So people are very focused often on the production and the operations, but the value add for us is actually in discovering more and adding more resources into our portfolio with the prospecting licenses and the existing mining license that we have. So
not so much a challenge, but more of a juggling?
A juggling, but getting the message across that this is an equal priority for us. And there's been obviously a period of underperformance for the company. We're through that now, and it's providing that confidence that the investors want to know that we are going to deliver.
Okay, well, on that positive note, we'll leave it there. Thank you very much, Toby Bradbury, the CEO of Shanta Gold.